Good afternoon, ladies and gentlemen. Magandang hapon po sa inyo lahat. Thank you for joining this MAP Fireside Chat on the digital upheaval in finance, implications for developing markets. This is a project of the MAP Management and Human Capital Development Committee. I am Cliff EALA, and I am your host and moderator for today. So please settle down comfortably, and perhaps for some of you beside a glass of wine or some scotch, and let's get on with it. May I request everyone to pause and bow our heads for a short prayer to be followed by the Philippine National Anthem. Our most merciful God, we come to you in our weakness, we come to you in our fear, we come to you with trust, for you alone are our hope. We place before you the disease present in our world. We turn to you in our time of need. Bring wisdom to doctors, give understanding to scientists, endow caregivers with compassion and generosity. Bring healing to those who are ill, protect those who are most at risk. Give comfort to those who have lost a loved one. Welcome those who have died into your eternal home. Stabilize our communities, unite us in our compassion, remove all fear from our hearts, fill us with confidence in your care. Amen.
Mga kababayan, ang pambansang awit ng Pilipinas. Kayang magiliw, elas ng sinakanan, alam ng puso, sa titik mo'y buhay. Lupang hinirang, tuyag ka ng magiting, sa manlulupin, di ka pasisigil, sa gagatang tutok sa simoy at sa langit ng bangaw, ay ginatang tulad, awit sa pagkayang minamahal, ang isang ng matawad mo'y tagumpay na naghihindig, ang bituin at araw niya kailan ang ay di maghihindig, lumalang araw ng walang pagsinta, mo'y langit sa piling ko, ang ligaya ng pagkay mga aking, ang mamatay ng dahil sa'yo.
Thank you. May I now call on Mr. Alfredo Fred E. Pascual, Governor in charge of the MAP Corporate Governance Committee and Lead Independent Director of SM Investments Corporation, to deliver the welcome remarks.
Thank you, Cliff. Our distinguished speaker, fellow MAP members, friends, ladies and gentlemen, good afternoon. On behalf of the MAP Management and Human Capital Development Committee, I would like to welcome you to this MAP webinar on the digital upheaval in finance, implications for developing country, an offering of the MAP CEO Academy. At the outset, let me thank Professor Randy KROSZNER for agreeing to share his expertise with us as speaker this afternoon. May I also take this opportunity to thank Management and Human Capital Development Committee Co-Vice Chair Vic Magdaraog for taking the lead in putting together this webinar. Thanks also to the Chicago booth for co-presenting this event. Today's discussion is intended to provide MAP members answers to the following questions. Hopefully, we get the answers. What will be the future of our financial markets in the face of the ongoing financial innovations and disruptions? Could or should a developing country like the Philippines slow down or even insulate itself selectively from the adoption of emerging financial innovations, or should it encourage them? What key structural and operational changes do banking and other institutions have to adapt to survive the upheaval and thrive going forward? How will business models change? How will consumers benefit from the financial disruptions? What are the implications for supervisory and regulatory authorities? Overall, what are the upsides and pitfalls for the various stakeholders in our financial world? This is the fourth webinar under the MAP CEO Academy for 2021. The first webinar tackled flexible work arrangements last February 16th. Our second webinar was on a new age of capitalism in the Philippines, held on March 16. And the third webinar on March 26 discussed debt restructuring, financial rehabilitation, and insolvency. For the rest of 2021, our committee will continue organizing more fora and discussions, like the program for the September 7th Joint General Membership Meeting of MAP and PMAP. Please monitor your email and Viber inboxes for details of our forthcoming offerings. Thank you one and all for joining us this afternoon. Keep well, everyone.
Thank you, Fred. Maraming salamat. Thank you for giving us some context for this afternoon's conversation. As Fred mentioned, we are conducting this fireside chat under the MAP CEO Academy. The Academy serves as the umbrella brand for MAP activities that address the continuing education of MAP members and other management practitioners, and the sharing of latest technologies and information on management and leadership. Some reminders, please, before we continue. First, as participants, you are automatically muted and your camera or video is automatically off. Second, you may submit your questions through the chat button that you see on your screen. Third, you will only be able to see our speaker and you will not be able to view the other participants. Well, I know we all miss being able to swap adventures and stories from our prolonged isolations, but we will have to wait for Arnold to set up a separate session for that. And lastly, in case you lose connection, please join again by repeating what you did earlier to log in. At this point, we will start off with some thoughts from our distinguished guest and speaker. In line with the practice at MAP, we will dispense with a lengthy introduction. Instead, we will flash a slide with his profile highlights.
All right. Thank you so very much. I'm really delighted to be with you. This is a great honor to be co-sponsoring this event. We have a number of alums in the Philippines, and we would love to have more alums of University of Chicago and Chicago Booth in the Philippines. We have a campus in Hong Kong and run our MBA program in Hong Kong. We also run our non-degree executive education programs in Hong Kong, as well as in our campuses in London, where I am right now, as well as, of course, Chicago. And so it would be great if you might consider Chicago Booth as a possibility for coming to get an executive MBA, typically people in their late 30s, early 40s who haven't gotten an MBA before, but see that as important as the next step in their career or making a career transition, or for the companies that you work for being engaged with additional training, and that's what our non-degree executive education program does. I'm happy to take more questions about that as we go forward. Well, I hope I can answer some of the questions, certainly not all of those questions in my brief introductory remarks and even throughout the session. But I think this is a very important issue and set of issues that that we're dealing with in financial disruption. And there's a very important tension. Some people want to sort of go back to the past and stick with the past because they're concerns about some of the disruptions, and some people want to embrace them. And that's why I was very glad that Mr. Pascual posed that question: should countries like the Philippines be embracing or trying to protect themselves from this? And I think it's very important to embrace it. And I think it's first virtually impossible to cut yourself off from these innovations. And second, I think it would be quite harmful both for companies and for individuals if you were trying to slow down the progress that are being made in these areas. That said, it's very important to have an appropriate regulatory and monitoring framework, because of course, with anything new, there are risks associated with it. So why do I say that there are a lot of value of these innovations? Why should we be embracing them? Well, I think just like this seminar is a very nice illustration of that. It would have been more difficult to organize, to get everyone together, including myself, to come to a meeting. Now it's very easy to be able to engage that way. Many things that we thought were simply impossible have now become possible. One of the things that that occurred during the last year is an enormous issuance of debt and equity. It was known before the pandemic that it was simply impossible to be able to sell large amounts of new debt or new equity without an in-person roadshow. The issuers had to go to the potential purchasers. They had to be able to look them in the eye and be able to ask questions. Otherwise, no one would make any purchases. Well, we had record issuance of debt and equity, and there was no and the Zoom world or the virtual world was able to substitute in. So things that were simply impossible have now become possible. Some of the things that are positive about that are that we can distribute shares and debt much more efficiently. So rather than have the groups of investment bankers and lawyers and others being traveling around the world, which takes up an enormous amount of time and also can present challenges for climate because of using so much air transportation. It can now be done much more efficiently, effectively, and in a more climate-friendly way. So there are an enormous number of these things that will that I think will be, at least to some extent, permanent parts of what we do going forward. Will there be no more roadshows? Of course not. Will there be more roadshows that are done electronically? Definitely. And so we can really figure out what are the key in-person meetings that we need to do, and what are the things that we need to do that we can do more efficiently. And so I think this is also very helpful for developing countries and developing markets like the Philippines, because it allows for a much easier connection to the rest of the world, both for companies within the Philippines and for Philippine startups to be able to reach out to the rest of the world much more easily than otherwise, and also for Philippine corporations and Philippine consumers to be able to benefit from the innovations that are taking place around the world. So this then comes to the next issue, which is thinking about business models, thinking about some of the upheavals that are going on, and I think it's very important that that business models embrace these changes and realize that they are there. They're going to be part of both the consumer landscape, the manufacturing landscape, as well as the services landscape, and so understand how best to adapt to them. One of the things that I teach in both my class and in the executive MBA program, as well as the traditional MBA program, as well as in the non-degree executive education class, is about risk management in this disruptive world. And one of the key things that I talk about is a structure that I have that's called UMAP, that you map your future, and you map that through creating a sense of urgency in the company. that you do need to adapt to these changes. You have to have a clear mission or purpose. It has to be very, very clear what you are driving for, what those goals are, especially when many people may not be coming into the office every day. It's extremely important to be crystal clear about what everyone is driving towards in the big picture as well as in the particular tactics. And so that's why the clarity of mission is extremely important. That's also very important for reaching audiences abroad. Obviously, agility is extremely important. Being able to pivot quickly when some sort of challenge comes up, and then P for persistence. It's extraordinarily important to continue to persist despite all of the uncertainty, and that's how you have this UMAP structure of urgency, mission, agility, persistence, in order to thrive in this environment. Because without that, it's going to be very, very challenging for you. You have to adopt the business models that will embrace this change and drive it forward in a valuable way for you. And so now, what are some of the specifics? Data. This is something that's extremely important, is being able to have the ability to collect and analyze data and make decisions that are based on data. It's really quite transformative what has occurred over the last few years and what continues to occur on the way decision making occurs. It traditionally had been much more, I think, judgmental, and some people had sort of good judgment and good insight, but didn't really have a systematic data foundation for making those decisions. It's crucial to do that with data now, and that's how you drive your decisions. That's how you drive the innovations, and that's how you produce value for your customers. Because you can bring data in not only from individual customers, but from broad swaths of customers, try to analyze, for example, in financial services, what might be most beneficial for them, to create portfolios for them, or to think about analyzing where the best investments might be, and do that in a very, very systematic way. That doesn't mean that human judgment will no longer be there, but you have judgment augmented by systematic analysis of data, and that's a recipe for success. And that's exactly the sort of things that we focus on at Chicago Booth. We really give a foundational approach to thinking about problems. We teach the fundamentals of economics, finance, behavioral science, because behavioral issues are extremely important. I think particularly important in this more decentralized world, as we've seen with GameStop, and how you can have large numbers of individual consumers now being organized to move markets, and taking all of that data and those foundations, and then the data you have to drive data-driven solutions. You need judgment to be able to figure out what are the right questions, what are the right areas you want to focus on, how to interpret the data. But you need to embrace these kinds of technologies that can produce very low-cost solutions for people. For example, for many investors, giving advice that will be more algorithmic, not completely algorithmic, but more reliant on algorithms, can reduce the costs for getting advice out to large numbers of people, to be able to connect with large numbers of people who do have internet connections. Another one of the important questions that Mr. Pascal raised was the regulatory framework, and that is something that is extremely important, because you want to make sure that in this world where there's a lot of data about yourself that is available, and that you might end up providing to people, that there's appropriate protection of that data, appropriate use of it, and that there is good enforcement against scams, which become much easier, because just as there's a lot of positives of being able to reach a broader audience, and audience that maybe had not had much interaction with the financial systems before, bad actors can take advantage of that. and try to scam people. And so it's very, very important to have appropriate monitoring and appropriate regulation in place. Cybersecurity becomes extraordinarily important because now so much data are available online and so much data are being put through online. So many transactions are occurring online rather than in person. That becomes extremely important. So developing a robust cybersecurity enforcement system, both at the individual corporate level as well as at the broader country level, is extraordinarily important. And I'll just mention one last piece before we have more direct questions with Mr. Pascal and from you, and that is cryptocurrencies and non-fungible tokens. So when I left the Federal Reserve in 2009, that was just the start of when cryptocurrencies were really taking off. The Bitcoin had been invented roughly around 2008, 2009. We had become familiar with it when we were at the Fed because we were quite interested in this new innovative payment system that we were trying to decide, well, was it only being used for bad actors on the so-called Silk Road, or did it have some potential to be useful for driving innovation? And so the decision was made at that point in the U.S. to close down some of the bad actors at the so-called Silk Road, which involved a number of people using these cryptocurrencies for illegal and illicit activities, but not stop the development of things like cryptocurrencies. And now, of course, more than a decade later, we have more than $1 trillion worth of value in cryptocurrency, a lot of innovation that is going on in that area. And of course, whenever there's a lot of innovation, there can be a lot of challenges. We've seen lots of risks associated with Bitcoin, an extraordinary amount of volatility that has come with that, as well as other cryptocurrencies. And so I still don't think of it as being a mainstream investable asset, but is one where there's been a lot of innovation, and I think the market is gradually maturing. We're starting to see fewer examples of illicit use. We're seeing far fewer problems at exchanges. That doesn't say that we've worked out all the issues, and that's why I say that I'm wary of suggesting that most people invest or because there are so many risks associated now, but it is a market that is maturing. Interesting, one of the variations on these cyber or cryptocurrencies has Ethereum is now being used to develop so-called non-fungible tokens. And so the way that the backbone idea of these cryptocurrencies, I prefer to call them crypto assets because I think they're not really being used as currencies. A currency would be something that has used as a medium of exchange, uses as a unit of account, and uses as a store of value. Well, it's not broad. None of these are being broadly used as a benchmark for value. So as a medium of exchange, as a unit of account. Most people transact in and out of their local currency into Bitcoin and out if they're doing a transaction. And some people are using it as an asset, but a very volatile asset, not one with a stable store of value. But there are innovations going on there that potentially can create a so-called stable coin that would stabilize the value of one of these crypto assets relative to either a currency or a basket of currencies. So as I said, I prefer to call them crypto assets rather than cryptocurrencies. But Ethereum is now being used for these, or at least the backbone of it is being used to create these non-fungible tokens. And the way all of these work is there is something called a blockchain that is behind it. It is a decentralized finance system. You've often heard of decentralized finance, DeFi. That allows many different actors to be able to see all the transactions that are on a chain of transactions, whether it is where one Bitcoin is spent over time. It's a bit like if you had a physical note and the note has a serial number on it. And so today we don't, and when we use physical notes, we never look at the serial number. We don't really care where the note came from or where it's going. And we don't keep track of that. On the blockchain and with in these crypto assets, that's exactly what they're doing. Effectively, each Bitcoin or each Ethereum, when it's created, it has a serial number with it. And then you can track that and how it's broken up into smaller pieces or added to other pieces, goes in and out of different wallets over time. You can track all of that on the blockchain. You don't necessarily know who is owning it. You know which wallet it's in, but you may only have the number of a wallet. You may not know the identity of who that number is associated with in that wallet, and there's still may be anonymity on the blockchain of the individual owners, even though you know in which wallet that particular Bitcoin is and where that Bitcoin came from. And so what's happening with non-fungible tokens is that rather than doing something that is fungible, that is like money that you could use any dollar bill, you could use any note, or you could use any Bitcoin to make a transaction, you have something that is not fungible, so it's not substitutable, to create something that's unique on the blockchain. And that's exactly what has happened now in the art world, but potentially in other areas where artists are saying, this is a unique representation of one of my pieces of art. It may be a file like a PDF file or a JPEG file. It will be posted on the blockchain, and so that will be then uniquely associated with, that particular file will be uniquely associated with effectively like a serial number on the blockchain, and everyone can easily identify that. And we've seen that has led to some very eye-poppingly large numbers of people making purchases of artworks. For example, an artwork that was sold by Christie's only in the last month for $69 million, and it was effectively a purchase of a PDF file or a JPEG file. We're actually doing a series on non-fungible tokens in the art world at the Hong Kong campus. We just did one with a purchaser of that $69 million artwork. His moniker on the internet is Troubadour, and I'll be doing one this Thursday with the head of digital art at Christie's, Noah Davis, and talking to him about these non-fungible tokens. So this is a new area where you can create uniqueness from something that may have seen as something that was not unique, just a file that could be turned around. That's something very, very interesting to think about, how you can use the blockchain to create a property right, to create a signature, to create what is often called in security issues a watermark that differentiates a piece of paper like a note from others to make sure that it's legitimate. So this is something that's very a new, interesting area that I think is another part of what we need to be thinking about in embracing the new technology, but also another part what we need to think about in terms of regulation. Will something that is posted on the blockchain be accepted as something that is an ownership certificate? Will that be acceptable in the courts of law? That's something that's still to be worked out, something very, very interesting and important going forward. And also these technologies, the blockchain technology, the NFT technology, digital currencies, are things that are being potentially adopted by central banks around the world. So it's not just in the private sector, but also in the public sector. Here in the UK, the Bank of England, as well as the Treasury Department, are thinking very much about the possibilities, the costs and benefits of introducing a central bank digital currency. In China, the People's Bank of China is very advanced in working on that. And I think there's a lot of very interesting potential there for reducing the costs of producing currency and producing a more efficient payment system through a digital central bank currency. But you also have the trade-off that unlike the traditional blockchains, which are decentralized, you can also have a centralized blockchain where all of the data go through a central node at the central bank. And so you may actually get much more centralization and much more monitoring and less decentralization. Sort of an ironic development of the technology, which was really developed to get away from centralization to allow flourishing of a more decentralized, individual-driven world, potentially could also be used centrally to decentralize payment system, decentralize a currency system. So another important both business model as well as regulatory issue going forward. So so Mr. Pascal, I think hopefully I was able to touch on a few of the questions, not answer them all, but at least give some a little bit of insights into those. And I welcome your questions and questions from the audience.
Thank you, Randy. Looks like we have a lot to talk about. Ladies and gentlemen, I encourage you to submit your questions through the chat box. As time permits, we will allow some live questions from the audience. To cover more ground, please be brief and direct to the point with your questions. I've been warned that if you extend too long, the organizers will cut off your audio, as they do at the Oscar Academy Awards. So let me kick this off with a question. Randy, last Friday, the Financial Times quoted you as saying, and I quote, "Central banks have always thought that they were key for payments, and now they realize they're not," end of quote. You're familiar with what it's like to be a central bank regulator. As one, you use monetary policy to manage inflation, unemployment, exchange rates. So how will cryptocurrency and decentralized finance affect monetary policy making? And won't decentralized finance create hyper risks for economies?
These are super important questions, and I'm really glad that you asked those, because I can then develop some of the things that I just very briefly mentioned in my introductory remarks. And so, yes, central banks always thought they were the only game in town, and now we're realizing that with the development of these crypto assets, that there are others who potentially can organize in this space. As I said, I think so far none of the private sector coins, whether it's Bitcoin or Ether or a whole variety of others, have really achieved a currency status. They're not used really as units of account, medium of exchange, and store of value. There's potential that they can develop that way, particularly if central banks don't act well. There's a lot of concern now that with all of the monetary stimulus as well as fiscal stimulus in the US and a number of other countries, that could lead to high inflation. If there is a high inflation, then I think you're going to see more usage of these alternatives. But it also may be that effectively the competition from these alternatives that are there are going to help to discipline central banks and make sure you don't get into a high inflation situation. And so that central banks realize that they are there, and as I said, in some countries like the UK as well as China, they are moving forward to very seriously think about implementing their own versions of that. And in some sense, in China, stepping ahead of the private sector, adopting it themselves and centralizing what otherwise would be decentralized. But as you also said, there are potentially some risks. So we've seen in many cases so far, at least in the early stages of Bitcoin and others, a lot of fraud that occurs, a lot of hacking that occurs, a lot of mysterious disappearance of wallets and keys to those wallets. And so it's a very, very risky area. Now, fortunately, most of that risk has taken place when these currencies were not very large. So they didn't pose a large systemic risk to the financial system. But if they do become very, very large, if they do become broadly used, that's much more, then the risks can be very, very high, because a cyber attack, a hack into the system can devastate the entire system. And so that's why it's extremely important to build the right regulatory framework, the right cybersecurity framework around using these as these grow in importance. So there are very important risks there. That's why I think the US is going relatively slowly, because it's looking very carefully at the risks. I think the UK, they're somewhere in between China and the US, moving ahead more rapidly, but certainly think about the risks. And China, by centralizing everything, they believe that they're going to be reducing the risks because it will be easier to protect the system.
Well, isn't there a contradiction there, because blockchain is essentially decentralized, and we eliminate any central monetary authority? So how is that going to pan out?
Now, that's a very, very interesting tension, and it's not clear whether in the end this innovation is going to lead to greater decentralization, which was the motivation for it, or whether you're going to see central banks like the People's Bank of China adopting this structure, which in principle can operate in a decentralized way, but centralizing it and becoming the central authority who does the so-called mining of the bitcoins or minting of the currency, and monitors all the transactions centrally rather than in a decentralized way. So I think that's going to be one of the very interesting evolutions going forward. And we'll see how well central banks do using that. And also, we'll see how consumers and businesses make their choices. Are they willing to have every single transaction go through the central bank? Many people would prefer, even if they're using the transactions legally, would simply prefer not to have everything centrally monitored. And so, and we'll also see whether central banks behave well or not, because if central banks are debasing the value of the currency, if there's a high inflation or a sharp devaluation of the foreign exchange value, then people will be more willing to use and try to use these decentralized approaches.
Okay, I'm going to take a question from the audience. We have one here from Mr. Jose Quisha. Will the issuance of a digital yuan diminish the importance of the US dollar as the primary instrument for settling foreign trade obligations?
Now, this is a very, very important big picture question about what does this mean for kind of the dominance of the dollar, because as I said, the development of cyber assets and cyber currencies pose challenges to traditional central banks and obviously central bank currencies, and obviously the US dollar is dominant. Many people thought that after the financial crisis a little bit more than a decade ago, that the dollar's dominance would be hurt. Actually, it's become more important in international trade, not less important in international trade. So it still has very much a dominant position. So the traditional yuan cannot really challenge the US dollar because of all the capital controls in China. If you can't settle the yuan internationally, if it can't be traded internationally, if there aren't deep liquid markets where there are a lot of international traders involved, you really can't get internationalization, and you can't really challenge the dominant reserve currency. Think about a parallel to Japan from 30 years ago. Japan became the world's second largest economy. An enormous trading powerhouse, but the Japanese yen never internationalized because there really wasn't a transparent central bank. There wasn't a transparent system. There weren't deep markets that were global markets, so it never internationalized. What's interesting is with a digital yuan, it may be possible that a digital yuan could be used internationally and still maintain some of the capital controls. And I think that's going to be one of the interesting things to see, whether China can develop this internally, then potentially use it as a base for international contracts, and develop an offshore market for the yuan digitally, but still maintain some of the capital controls, precisely because of the centralized nature of how they would do it, because they can monitor each individual transaction. And so it's only if they can do that to be able to have it used internationally, but still be able to maintain some of those capital controls, that it then potentially could be competitor. That's not going to be an easy thing to do, but I think that will be one of the things that the People's Bank of China will be experimenting with.
Okay. Earlier, you mentioned the tension between the status quo and future innovation. So there is obviously a tug of war between the regulation and innovation. Some innovations either do not progress because of regulatory roadblocks, or the innovation leapfrog regulation, then regulation has to catch up. In your view, which financial regulation should be adjusted now or very soon to allow for faster innovation?
So I think one of the key things that we have to decide is, what are these crypto assets? Are they, as well as non-fungible tokens, are they closer to being securities and so should come under traditional security regulation, or are they closer to commodities and would be under traditional commodity regulation? Those tend to be very, very different types of regulatory systems. It also has a big impact on exactly how they would be taxed, especially if there are transactions taxes. And so working out the tax regime, working out whether these are considered more like commodities or more like securities, I think are the first order issues to try to decide, and then build the regulatory system around them. And then obviously there are all the cyber and property rights issues that run in parallel to that. They don't come from the traditional Securities and Exchange Commission, Commodities Futures Trading Commission, but they come from the legal and law enforcement side. But I think what we're going to see going forward is those two sides need to come together. I think you can't be thinking about securities regulation and commodities regulation without thinking about cybersecurity, without thinking about the regulation of these cyber exchanges. And so we've got to bring those two together. And so there has to be innovation on the regulatory side, rather than thinking in just the traditional categories. We've got to see them being brought together to make sure that we have safe and sound systems and good support for these going forward.
Okay, I will take another question from the audience. How advanced is open banking or open finance in developed economies? In the Philippines, it is now being discussed, but the larger incumbents may resist it. So unless regulators mandate it, it may not progress well. What are your thoughts on this?
So this is always one of the challenges, where you have large established firms that, of course, never like new firms coming in, and a lot of new firms wanting to come in. In the UK, for example, they set up a special regulatory regime to try to promote so-called challenger banks. That is, smaller new banks using innovative technology. And I think that might be a very useful framework, because it's one that has not disrupted the traditional banks. The traditional banks are still profitable, are still very safe, but has helped to encourage the development of so-called challengers, of using new technology. And now some people might say, well, that's unfair, that there's a relief of some of the regulatory burdens on the smaller and new firms, and also that could, and what about financial stability? Is that problematic? Well, precisely because these are newer, smaller organizations, they're less likely to present systemic risk to the system, and so I think precisely because they're smaller, the financial risks are lower than for very large established banks. And I think it is important to understand that many of the existing systems and existing regulations favor the incumbents over the innovators, and you do want to try some of these innovators. And so that's why this so-called financial challenger approach, or sometimes it's called a sandbox approach. Sandbox because You have a sandbox where children play, and if they fall down because they are shorter and there's sand on the ground, it doesn't hurt as much and doesn't have as much consequence for the system. Singapore has been adopting these kinds of approaches, and I think it's valuable to look at the Singaporean approaches, the UK approaches, to see how you can maintain the stability of the system and maintain the profitability of the existing banks, but encourage innovation.
So what specific services do you think, if you had a choice, would you push to develop within a decentralized finance framework without getting into hyper risky situations?
So I think one of the things that many of these innovations do is help to allow for international transactions at much lower cost. And so so-called remittances. So remittances coming back from Hong Kong, of people who are in Hong Kong may be sending remittances back to their families in the Philippines, for example, or we have in the U.S. there are a lot of people from Latin America who are in the U.S. and sending remittances back to their families. That seems like a natural place where this innovation can help to reduce costs. Now, obviously, again, it's very important to have a very solid regulatory framework, because you don't want people taking risks with the money that they're sending back to their families. And so making sure that you have a well-regulated exchange and a well-regulated structure that you're operating with is important. But that is, I think, a natural area where there tend to be very high fees and the system is very slow, that these innovations could be very helpful for.
Okay. We have another question from Cora Claudio. Cora Claudio, do you have a question? Would you like to ask your question? Okay.
Hello, can you hear me?
Go ahead, Cora.
Okay, I have two questions. One is on the way risk management is being done in the finance sector, in the banks. And the other one is on valuation of capital. In the first one, my assumption, my observation is that the theory of probability, which is the basic theory that is used in assessing risk, is not being taught and being practiced well enough in assessing risks by those who manage assets in banks. So I wonder how it is being taught in the school of our speaker and elsewhere. The second one is the hot topic now in accounting is natural capital accounting. I wonder how it is now entering the system of valuation and accounting in the finance sector.
Great. Thank you very much for those questions. Yes, risk management is extraordinarily important and can be sometimes very, very technical. And so we have a number of classes that get right to the heart of that, of thinking about risk management, thinking about value at risk models, thinking about all sorts of other types of models where all the technical pieces are taught. But what's also very important is to understand the big picture. And so the type of risk management that I teach about is thinking about the broader questions of well, where might risks come from and how do we adjust for those risks? For example, one of the things that we teach is that if there's not a lot of data, this is not the key thing to be focusing on and trying to assess those risks. So like trying to assess the probability of the next pandemic. These are low probability, although very high impact events. It may not make sense to try to put your resources to assess that because there's so few observations that in technical terms, the standard errors are very high. That is, your forecasts are not going to be very good. But that doesn't mean you can't be prepared. And you can be very well prepared by saying, well, let's do some scenario analysis and scenario planning. Let's look at a series of big risks that are are outside of our control, but that could happen, and then think about what are the ways in which we can assess those risks. And so, for example, you may not be able to predict the next pandemic, but you can look at your supply chain and understand what are the risks associated with that supply chain. What are the risks associated with the financial markets? What if there's a cyber attack? What would that mean? What if there are a disruption at some of the chip manufacturers? Exactly what we're seeing now, whether it's a dry spell and hot weather in Taiwan, slowing down the production of chips and having a global implications. So thinking through those, so we teach it both at kind of the big picture conceptual level of breaking complex problems down into problems that you can control. So when the shock comes, you're prepared, you have those pieces, and then the technical piece of doing value at risk, doing all of those pieces. And then on the accounting side, one of my colleagues, Christian Leutz, is really on the cutting edge of thinking about all of the issues related to ESG and climate, of thinking about sustainable accounting measures and innovations that are coming there. And he's one of the world leaders on that, and certainly in his classes, he teaches about not only traditional valuation, traditional accounting, but also these innovations that will take into account impact on the environment, other types of impact in sustainable accounting measures.
Okay, thank you. We have another question on Bitcoin. Professor Nouriel Roubini has warned that Bitcoin is a self-fulfilling bubble. He says that it is not a currency, nor is it an asset. What is your reaction to his statements?
Well, as you see, I certainly agree that it is not a currency, and certainly I hope I made it clear that so I'm not an investor in Bitcoin, and so I don't feel that I know enough about it or feel confident enough to understand the valuation of it to be able to be investing. So I think I would be very wary of making investment in it. But I think I would disagree on whether it's potentially an asset class. And so I think what's interesting is that it's possible that what's happening is that it's creating a, much like there was mining of gold and silver, you could use the digital world to create assets that are digital assets rather than physical assets. And so that's why I call them crypto assets. I still would, even as assets, I still don't feel that I understand the valuation of them well enough. But I do think that's something that's very interesting, and I think that will be something that will be lasting over time, even if they aren't used as currencies, and even if there are continue to be a lot of fluctuations in the value of them.
Okay. Fred Pascual, do you have a question? Fred, are you there?
Yeah. I just would like to pursue the question of benefit to the economy of financial disruptions. Of course, in the Philippines, the regulatory authorities are encouraging, and the market is also encouraging traditional banks, to do their digital transformation, in the hope that by doing so, they'll be able to cover, a huge market that is currently underbanked, or even unbanked. Now, well, you already commented that it's possible to look at cryptocurrency like Bitcoins, something like gold, it has a value. But the other disruptions that are happening, DeFi, these non-fungible tokens, what economic benefits do you see are they gonna bring about to the stakeholders?
That's an important question, and so if well used, the lower cost of in some cases in remittances, but lower cost of being able to provide banking services digitally to a large group of people. There can be enormous benefits from that, of being able to bring people into the formal financial system. And so it tends to be that costs are much lower in the formal financial system than in the informal one. Property rights enforcement tends to be much better. There tends to be much better record keeping, much easier access to borrowing for starting entrepreneurial companies, because if you're not part of the formal financial system, you may not have access to capital, or you only have access to capital if you happen to have a wealthy relative. And good ideas aren't related to whether you have a wealthy relative or not. Those are distributed across all sorts of people with all sorts of backgrounds. And so having access to a low-cost financial system digitally, and loans digitally to be able to start up entrepreneurial ventures, I think is very valuable. So that's, I think, an enormous upside from using these technologies well. But as I said, it's very important to maintain data privacy, consumer protection. These sorts of issues are extremely important when you're reaching out to new people who have not had as much experience working in the financial system. The people without that experience and background could be also subject to various scams, and so you have to be very careful about that at the same time. But there's a lot of potential upside in the right regulatory environment.
Do you think there'll come a time that these financial innovations will make the banks, the traditional banks as we know them, redundant in the same way that Grab and previously Uber made taxis redundant?
Well, we still here in the UK, we still have those black cabs around, and in the US we still have taxis. So it's not that they have completely eliminated them, but they're a much smaller part of the market than they once were. And I think that possibility is there, that you could see if the innovators get this right, and you get the regulatory and legal framework right, these could really take off because they're very low cost and they're very convenient. Now, it's also possible that some of the traditional banks could embrace some of these things and be able to maintain their market share. And we've seen that also with some of the ride-sharing apps. In some countries, the taxis are part of the ride-sharing app, and it allows the taxis to get to individuals more easily, because that's one of the problems with taxi cabs. They're just randomly driving around the street and looking for people. The digital apps are extremely good of matching where the person is with the automobile, and so you can embrace those technologies and maybe make your position stronger. But you have to make sure that you're responding to the consumer needs and doing it at a low cost. That's not what traditional banks haven't been as good at that. They've been much slower at that. But if they can adopt that, then they can compete with the newer players, because the advantage they have is they've got the existing accounts, but it just seems, and they have all the data. But it just seems that traditional banks have, when that's true, whether it's in developing countries or developed countries, have just not been very effective at being able to have that sort of agility that I talked about, to be able to use the natural advantages that they have to thrive in the digital world. The digital world, has really been thriving at the expense of the traditional banks.
Well, gentlemen, it's 4:59. Unfortunately, we have to wrap up. I'd like to thank you, Professor KROSZNER, for your expert views and interesting insights, and we definitely hope to have you again. Before we close, we have picture time. So I invite Randy, Vic, Fred, and all those whose cameras have been enabled by the organizers to keep your videos on for a few pictures.
Okay, ready? 1, 2. Another one. 1, 2. One last time. 1, 2. Thank you.
Thank you. Thank you, Randy.
Thank you so much.
Okay. As always, one last thing. These MAP events wouldn't be possible without the hard work of the people behind the camera. So thank you to Arnold Salvador and the fabulous MAP staff. Maraming salamat po sa inyong lahat. And to all of you, it has been a pleasure hosting you. Thank you for joining us. Have a safe and delightful evening. Thank you.
Thank you.
Bye-bye.
Thank you, everyone.
Thank you, Vic.
Thank you, Professor Randy. Thank you for your time. Thanks to
Fred.
Ria as well.
Thanks, Fred. Thanks,
Great.
Vic.
Thanks for the excellent questions. It was great. The questions from the audience, your questions were really fabulous. Unfortunately, it was difficult to answer all of those questions in an hour.
Understandably, you know, these are
But I
big
tried to
questions.
touch on a number of
There are a ton of other questions, so we just didn't have time to get to all of them.
Yeah, there's a, you know, your talk attracted a long list of questions here in the chat box, you know.
Well, when if you can, because I'd be curious to know what people were interested in, if you can be able to capture those and maybe send me a file that you could send those
We'll try to do that. Yeah, good idea.
Because it's always very interesting for me to know what people are interested in. Because, you know, especially in this kind of format, it's harder to get that feeling. You know, when I'm in the physical room, I can see when people are really paying attention and when they're doing other things. And getting those questions is very helpful. And as I said, the questions that came in, the ones that I saw, as well as the ones that you were able to ask, looked excellent. So,
Yeah. Arnold, I'm sure you can organize it. Arnold, we can.
Yes, we will.
Okay. All right. Thanks, Arnold.
Ria's gone. I saw Ria around, you know.
yes.
Yeah,
Thanks to Ria also for
he logged off early.
Yeah, Ria
helping to build the bridge
organize
to
this
us.
as well, you know.
Yeah, this is great.